Well, we're back with you, keeping a close eye on our ag commodity trade. I'm Marlin Bohling with you, your tour guide to these ag commodities, and it's been a bouncy ride here so far today. Let's go ahead and take a look here at this corn market first off, and our quotes are provided by Bar Chart. This March corn right now is still trading 1 3/4 higher. It's just kind of settled in right there, a little over a penny higher. We're at 487 1/4, just not really going anywhere for about the last hour. Now, if you look at soybeans, this is the one that I pointed out earlier. We were about 8 cents higher at the end of the overnight trade. And look at them now. We have March down 9 3/4 cents, almost a dime lower than our close yesterday. And we're now at 13.16 3/4 after a high of 13.35 1/4 overnight. Can you say fail on that one? Yeah, maybe. On the wheat in Chicago, of course, we had another sale of soft red wheat to China overnight, 198,000 tons. And you have the March wheat there now 6 3/4 higher at 627 1/4. They had a good spurt at the open this morning, and then they trimmed off about 9 cents from that early go. Now in hard red wheat in Kansas City, March is 3 1/4 higher at 661, and that's 9 cents off of its earlier high. Now on spring wheat today, you have March Minneapolis wheat 2 higher at 738 1/4. It's been playing hide and seek on both sides of unchanged here throughout the morning. And on the cotton, right now that March contract is up 116 points on the day, and that would be at 79.84 per pound. It's just kind of elevating very gradually toward the upper end of the trading range here today. We'll ask Tommy Grisafi of Advanced Trading about what's going on in the crop markets here this morning. There he is. Hey, Tommy, good morning. Good to have you with me here today as we look at what's going on in the trade. Do you classify that as a fail on soybeans today?
Marlin, I failed a lot of things, so I could be a resident expert on what failing looks like. It's not the most bullish thing in the world to happen. About 7-10 days ago, soybeans were real close to 14, maybe had a 14. We are officially $1 off the highs because it's raining in the rainforest. And although not all the crops were planted in South America, enough of the crops were planted in South America. If they continue to plant crops and it rains timely, we are going to possibly greatly have the ending stocks, improve, go up. We'll have a lot more beans. I'm having a hard time speaking this morning. If it rains timely, they plant so much more in South America than they used to. We're going to have a lot of extra supply and demand. And also to note, as we come into the end of the year, the funds are really long beans. And as you know, in cattle and other markets, it's fun when the funds are long and you're going with it. But when they go to get out, it gets a little messy, my friend. So that's my opinion about the soybean market.
Well, I'm very intrigued here, Tommy. We're getting toward the end of the year. And in your opinion, when you look at the overall sales we have made so far here on new crop soybeans this year, how close are we to that window just really closing and we're not going to be able to sell anymore after a little while? How close are we to that?
We're getting there. We are actively shipping out of the PNW. The northern states had good bushels, good yields. It's a lot safer to get grain there, not having to deal with the Mississippi River, the Panama Canal. So the PNW could stay active a little bit. I have been watching the sales. We have had a lot of sales to China, but we're not nearly close enough to what we would be versus last year. On an interesting note, before we go on break, how about those wheat sales? Again, wheat to China this morning. That's fun to see. It's interesting, Marlin, how wheat breaks. I don't even know how many dollars off the high. A lot of dollars off the high. Wheat has a half off sale, and China goes shopping in the wheat markets across the world. They're very savvy traders, and we want to learn from them. Buy low, sell high, my friend.
Yep, savvy. That's the word I was thinking of. Savvy, I think is how you spell that. And boy, they are savvy in the true sense of the word. And when they start buying like that, to me, that gives me hope on the wheat market that it probably won't be going too much lower. If it does, they'll probably buy even more. Interesting stuff. Thank you, Tommy. We'll be back and we'll analyze our livestock trade in just a moment. Now we'll talk with Tommy Grisafi about our livestock trade here on a Tuesday. Well, as we get closer to the noon hour in Chicago, let's see what's going on with live cattle. Our quotes are provided by Bar Chart. Tommy, we have the live cattle starting to catch a bid here all of a sudden. Last time we checked, they were only 30 higher, and now February live cattle are up $1.40 at 168.47. Whoa, that's one tick from our high of the day. April live cattle now $1.20 higher at 170.90. That's 10 cents from its high of the day. Well, let's see what feeders are doing then. Oh yeah, you have March now $4, 2 cents higher. We're at 217.60 after a low this morning of 213.35. Well, you can do the math. That's $4.25 off of that earlier low this morning. We're within about 40 cents of our high of the day. Big, strong gains in feeders, and I'll point out the most strength is in the nearbys, typically kind of considered a bullish sign. And on lean hogs, they just cannot join the party. February is down $1.17 at 69.62, and you have April down 132 at 76.22. What's the deal with the lean hogs here today, Tommy, and why are the cattle flying high?
I don't have a great opinion about the lean hogs. I know that we're through the holidays, and pretty much as we go to the big box stores to purchase stuff for Christmas, that they've already purchased that. They're getting ready to process that. Pork comes out to the market a little quicker than beef. As far as beef, you could be someone who's not a rancher and understand that that feeder cattle was of value. Am I saying the market can't go lower? No, just saying with the fundamentals, I think you would see some short covering, some speculators come in. It's nice to see the cattle market stabilize. What you don't want to see is that after you and I get off the show that something changes and then they close lower on the day. I would say that the margin department's pretty much gotten to everyone they had to get to. And when we look at the cattle market for the year, it's not up nearly as much as it was. And although bull markets are fun and the party was great, the hangover is hurting terribly for some. With that, on the bright side, interest rates have come down tremendously in the last 30 days from a 10-year that was 5.05 to a 10-year that is 4.20. So that's going to help a little bit on the borrowing cost. The feed for anything livestock, you take it to chickens, hogs, cattle. Corn's come down a lot. We see meal come down a lot, and maybe that'll help stabilize those markets. The fundamentals are solid, but the price tanked, my friend.
Hopefully those producers are edging a little closer toward profitability now. So anyway, got a little work to do yet. Thank you, Tommy. Always a pleasure. Tommy Grisafi of Advanced Trading with us here this morning.